Welcome to the Deep Dive. Today we're opening up the books on Micron technology. We're going to tackle their recent fiscal Q4 2025 results and, crucially, their forward guidance. Now, if you've been listening to all the noise around the AI revolution, you might think it's just about GPUs. But this deep dive really shows memory might be the new bottleneck, and maybe the new profit center, too.
That's exactly right.
Our sources today, earnings calls, press releases, analyst notes, they paint a picture of a company really changing fast. It looks like Micron is shedding that old skin, the commodity chip maker image, and planting itself firmly as a high-margin, absolutely central player in this whole AI infrastructure boom.
Yeah, absolutely. So our mission today is to unpack these, massive financial beats. But we have to go beyond just the headline numbers. We need to understand the structural shift happening, what specific products, especially high bandwidth memory, HBM, are really driving this incredible accelerated growth. And maybe most importantly, how durable is this? Can this market tightness, which Micron is forecasting way out into 2026, can it actually last?
That durability question is key, isn't it? But let's start with the anchor point. Fiscal 2025 revenue, a staggering record, $37.4 billion. That's up nearly 50% year over year. And it sounds like it was almost entirely fueled by this explosion in AI data center growth. That's not just like incremental change. It feels like a real inflection point.
It really does.
Okay.
Let's dig into the fine print then.
Okay, let's start with the final quarter of fiscal 25. FQ4. Revenue came in at $11.3 billion. That's a 46% jump year over year. And the non-GAAP EPS landed at $3, down 93 cents per share. A significant beat versus expectations.
And what's really fascinating here is just the speed they're regaining profitability and even exceeding past peaks. This isn't just about selling more chips, it's about selling higher value chips.
Yeah.
Across the whole fiscal year, gross margins expanded as 17 percentage points, hit 41% overall, and FQ4 margins alone, 45.7%. That expansion, that's the clearest sign that this pivot to differentiated high value stuff is really working.
And here's where it gets really interesting for the future. The guidance for Q1 fiscal 2026. They're projecting record revenue again, $12.5 billion at the midpoint. But the margin guidance, wow. Gross margin guided to 51.5% midpoint. That pushes their record EPS guide up to $3.75.
Yeah.
Now, okay, stepping back from the excitement for a second. For a company that's historically been pretty cyclical, is 51.5% margin guidance.
Yeah.
Is that really sustainable? Isn't there a risk that competitors, Samsung, SK Hynix, try to undercut them if margins are that high?
Well, that margin guidance isn't accidental. I think it tells you everything about the product mix shift. If you connect this to the bigger picture, look at their new operating segments they disclose, specifically the cloud memory business unit, the CMBU. Yeah. That's the unit focused on those really high-end sort of bespoke data center components. That CMBU unit, its gross margin hit an incredible 59% in FQ4. Yeah. 59%. That's why the overall company margin is soaring like this. It's directly tied to the fact that their data center business overall reached a record 56% of total company revenue for the full fiscal year. So when, more than half your revenue is coming from your highest margin category, your whole profitability profile just fundamentally changes.
That really is the proof point, Dan. This isn't just a rising tide lifting all boats. It's a different business model emerging. Okay, so let's move straight to the engine powering this shift. HBM and specialized memory. The combined revenue from their high-value data center products, that's HBM, high-capacity DIMMs, and also LP server DRAM, reached $10 billion in fiscal 2025. $10 billion. That's more than a five-fold increase from the year before. It's staggering.
Yeah, and drilling down specifically on high bandwidth memory is critical because that's really the bleeding edge right now. Micron's HBM revenue, just in FQ4, grew to nearly $2 billion. $2 billion in one quarter. That single product line, it implies an annualized run rate of almost $8 billion. And that's mostly driven by the rapid ramp-up of their HBM3E products. And what gives them the visibility and kind of locks in that high margin for the next year or so is that they've apparently already secured pricing agreements for the vast majority of their HBM3E supply for calendar 2026. So this isn't just selling on the spot market day to day. They're building a longer-term foundation for revenue and profit. That should minimize some of that cyclical risk we were just talking about.
Securing supply and pricing, 18 months out? That provides incredible stability, yeah.
But they aren't just resting on HBM3E, right? They're already talking next-gen HBM4. They've shipped customer samples already, and they're claiming industry-leading specs, bandwidth over 2.8 terabytes per second, pin speeds over 11 gigabits per second. They're basically asserting their HBM4 outperforms everybody else on performance and power efficiency. And claiming that kind of lead in HBM4 is financially crucial. HBM isn't just a component you slot in anymore. It's deeply co-designed, integrated with the AI accelerator itself, so being the performance leader. That validates their premium pricing. It ensures they're the first call for those next-gen AI platforms where speed is everything. This is where that differentiation really, really pays off.
And their strategy for HBM4E, the generation after HBM4, sounds even more clever, especially from a margin perspective.
It absolutely is. For HBM4E, yeah, they'll offer standard products, but they're also planning this optional, probably highly lucrative customization path for the base logic die. And this requires a really strong partnership, like the one they highlighted with TSMC, for actually manufacturing that specialized base logic. They explicitly said they expect HBM4E with a customized base die to deliver even higher gross margins than the standard version.
Okay, so for the listener, maybe explain that a bit more.
Yeah.
Why does customizing that base logic die mean higher gross margins?
Right, because it shifts Micron from just being, a component vendor to being a deep co-design partner. That base logic die, it manages how data flows between the memory stacks and the main processor, the GPU usually. Customizing it lets the customer optimize that chip specifically for their unique silicon, their specific AI workload. So Micron ends up selling engineering expertise, unique IP, guaranteed integration performance that commands a premium way beyond just the cost of the silicon itself.
Got it. So they're maximizing ROI across the board there.
Yeah.
And we also see specialization elsewhere, right? Like LPDDR5 for servers. They mentioned being the sole supplier for that LPDRAM in the data center for NVIDIA's GB product family since launch. And they're hitting impressive specs on GDDR7 too, talking about pin speeds over 40 GBps for future AI systems.
Yeah, it's a really robust, high-performance portfolio they're building. It's a powerful statement about their technology leadership.
Okay, so let's switch gears a bit. We've talked about what they sell. Let's talk about how they make it, their operational edge. Because Micron isn't just selling AI chips. They're apparently using AI pretty heavily internally as a, quote, powerful productivity driver, trying to sharpen their own competitive moat.
And you can actually see tangible results from that. On the design side, they're talking about a 30–40% productivity uplift already in some GenAI use cases, mostly things like code generation. And that directly translates to faster design cycles, quicker time to market for these really complex new products like HBM4.
Right, faster innovation.
Exactly. And then on the manufacturing floor, the application seems even more profound. They've driven a 5-fold increase in the number of wafer images they analyze just in the past year. So by collecting 5 times the useful data, the telemetry from their tools, they can find and fix defects much, much faster. And that directly improves manufacturing yield. And yield improvement, that's probably the single biggest factor driving profitability in chip manufacturing.
So it's this synergy. AI driving demand and efficiency for them. And that efficiency that led to a huge technology milestone with their 1-gamma DRAM node, right? They reached mature yields in record time 50% faster than the previous generation node. And Micron is the first in the industry to actually ship 1-gamma DRAM.
Yeah, hitting yield maturity that quickly is a massive cost advantage. It means they can produce the huge volumes of advanced memory needed for HBM and next-gen servers cheaper and faster than their rivals potentially can. This operational excellence, it underpins why they can even guide to margins over 50%.
And the investments clearly reflect this commitment to staying ahead. They installed the first big EUV tool in their Japan fab for that 1-gamma capability. And they mentioned achieving a global record time from getting the tool to getting it installed and running. Their CapEx for fiscal 25 was $13.8 billion. And they expect fiscal 26 CapEx to be even higher, driven mostly by DRAM front-end equipment and building out those new fabs in places like Idaho and New York. It's a heavy investment, but sounds essential to secure their place in the AI boom for the next few years.
That really is the cost of staying differentiated in this market. You have to invest heavily.
Okay, so we've covered the product leadership, the operational efficiency. Let's look at the market environment now, because the demand seems to be broadening out significantly beyond just that massive AI server market. What stands out to you about the durability of demand overall?
Well, the durability looks pretty strong, actually, and the AI effect, it's acting more like a ripple, spreading outwards, not just a single tidal wave hitting servers. They updated their calendar 2025 market outlook with some significant upward revisions. Total server unit growth, they now expect around 10%. That's up from mid-single digits previously.
Okay, 10% server growth is strong.
It is. And what's particularly interesting is that traditional server growth, the non-AI servers, that's strengthened significantly too. They shifted from expecting flat growth to now mid-single digits. And Micron thinks this is partly because AI agents are actually initiating traditional server workloads when they execute tasks for users. So AI adoption is boosting legacy systems too. It shows a deeper, more systemic demand effect.
Right, that ripple effect. We see it clearly in the PC market outlook, too. PC unit shipments revised up to mid-single-digit percentage growth now, driven by both the Windows 10 end of life coming up and these new AI-enabled PCs needing way more memory.
Exactly. And even the mobile market, while smartphone unit growth is still expected to be kind of low single digits, the content growth is significant. About a third of flagship phones shipped in Q2 apparently had 12 GB or more of DRAM, and they expect that mix to just keep increasing rapidly as AI features become standard on phones.
Okay, so this raises a critical question then. If demand is broadening and strengthening across servers, PCs, and mobile content, what does that mean for the supply constraints you mentioned earlier?
It means tightness, and potentially even deeper tightness heading into calendar 2026. DRAM supply is already tight now. Micron anticipates more supply constraints next year because of a few things hitting at once. Supplier inventories are low across the industry. Node migrations are constrained. It's getting technically harder and slower to move to 1 gamma and beyond. And the lead times and costs for building brand new wafer capacity globally are just really long and high right now.
Right.
So because of all that, Micron is actually exercising supply discipline. They're being strategic, holding back a bit. They expect their own bit supply growth for non-HBM DRAM and also for NAND to be below the overall industry bit demand growth in calendar 2025. It's a strategic choice that helps them keep pricing power and sustain those really high margins.
And speaking of focus and strategy, they made a pretty clear pivot by announcing they're ceasing future development of mobile-managed NAND products altogether. That seems like a textbook move to focus resources, focus investment solely on those higher ROI opportunities, which means HBM and high-value data center parts, underscores their absolute commitment to this new high-margin future.
Yeah, I think to summarize the thesis here, the story feels pretty complete and, importantly, durable. Micron's ability to combine that technology leadership, with HBM4 coming, their efficient 1 gamma DRAM production, combine that with using AI internally to boost productivity and have all of that supported by a tight supply environment across the board. It really validates this, I think, permanent shift away from being just a cyclical commodity player.
And that validation is definitely backed by serious capital. Fiscal 2026 CapEx, expected to be higher than fiscal 2025, is already large, $13.8 billion. Shows they're investing heavily in the equipment and the fabs needed to really seize this opportunity for years to come.
Well, that level of investment is necessary, right? Because they are positioned right at the epicenter of this huge economic shift. Micron's leadership even noted that over the next few years, literally trillions of dollars are expected to pour into AI infrastructure globally. And you have to remember, a really disproportionate chunk of that spending goes specifically to high-performance specialized memory. So Micron is now placed directly at the heart of securing returns on that trillion-dollar infrastructure bet.
And that's really the key takeaway for you, the listener, I think. While so much attention goes to the processors, the GPUs, it's these specialized memory suppliers, like Micron, that are becoming the essential high-margin linchpin holding this entire multi-trillion-dollar AI infrastructure build-out together.